Welcome to the Trading Lounge and the US Indices report, but we're going to have a look at two European wave counts and patterns, and then we'll look at the S&P 500. And when we're looking at the S&P 500, we'll look at a couple of counts as well. This particular market here is the Italian market, and it's I'm choosing this one because it's very sort of square. You can see that the sideways pattern there is traveling sideways, and that normally indicates a corrective pattern. So when a market, if I can explain just with my drawing tool here, when a market moves in a direction like up like this and then has a any type of corrective pattern, no matter how long it goes, then it will move up because it came from this direction. And that's the same with moving down. If it moves down and we can identify some type of corrective pattern, whatever it is, then we know that it's a continuation. We know that it's corrective. We know that it's a continuation pattern. So if it's moving in this direction, then it will continue to move down in this direction. And this is what this particular pattern here is really what we're seeing here. We've seen a move up here, and in this degree of structure anyway, and then we've seen this sideways pattern here. So it should continue up here. Now, it does count quite well as an A, and then an A and a B and a C wave in here for wave B, and then 5 waves for wave C here of A, and then an A wave here in 3 waves, basically an A and a B, and then 1, 2, 3, 4, 5, and then a B wave in 3 waves. Doesn't look like it, but it is. And then a C wave here in 5 waves for wave B here. So while that low is in place here, this market can have 5 waves up here and then roll over from that point there, okay? So that's sort of the best fit. Now, when we go and have a look at another European market, and this time we'll look at the stock 50, which is the top 50 stocks. It's a slightly different pattern. I mean, it's not as square and not as good looking as the other pattern because it's dropped lower through here, but it's still the same pattern. The A wave, in fact the B wave should actually go to here. In this case, I haven't adjusted this yet, but that's fine too, and that would simply just move here. That makes much more sense, and I'll just save that. Now, so we've got the A, the B, and the C here for the A wave, and then the A, the B, and the C here for the B wave. So as long as that holds, as long as that low holds there, then we need to respect that we can have an impulse wave of 5 waves to the upside here on this market. And this is the same with the other European markets. So it's all about, this count's all about that low staying in place. And then this brings us over to the S&P 500, which is, it's a different wave count, but we've used the European markets before like this. So in this case here, it's traveling sideways, but it's slightly different. It's got its own little footprint, but it still basically can be counted the same as the A wave, the B wave, the C wave for the wave A, and then an A, and then a B, and then 5 waves for a C wave here. Now, as long as that low stays in place here, and more so on the cash market than anything else, then we can be looking at 5 waves to the upside here. Okay, so this is, at the moment, this is the primary count that I've got. Okay, now, and we can look at this on, say, 5-minute chart. Let me just go here. So we're just looking from that last little bit of a low coming up. Now, in this instance here, from this low, we're looking at, we've got a really nice little 5-wave structure for wave 1, an A and a B and a C for wave 2. And then we've got 1, A, B, C for 2, all the way up for the 3rd wave, back for the 4th wave, and then up for the 5th wave to make the 3rd wave. So we've got 5 waves in here, and then 4 and 5. Now, normally the market would pull back 50-60%. It's pulled back further than that. but we do have a strong 5-wave structure here, so I kind of got to respect that until it's broken, and technically this market can come all the way down to 1 point within this particular low here. So wherever this comes, I mean, normally we just look at the 61.8 and that works for us most of the time, but technically it can come all the way down here within 1 point distance. So there might even be another little move down here, but point being is that while it's above this one here, we need to look at this as being wave 2, and then we would look for wave 3, 4, and 5 to the upside. So it's already sort of started. So we can look for those 5 waves now. So that's one count, okay. And if we get a move above 1970 here, 61.8% movement of this here, then up into this area here above 70 here, then that would prove that would give you confidence that we're actually moving up from that stage, being above that. So you could look for long trades above that, okay. Now the second count that we've got is more bearish, and we looked at that yesterday, and perhaps we can look at, I think we had a look at a 3-hour chart, I'm not quite sure, but this will do the trick anyway. So in this instance, we've already moved up to the 61.8% here, all right? So it's logical that we could put wave B in place here, and we have 5 waves moving down through here. Now, with that in mind, we would need to take, if it was going to be a bearish move, then we need to take this last low out. So if we get a move through here, then we can look at this as being down for 1, back for 2, which hasn't really pulled back. And we're going to look at this again in here. So down for 1, back for 2, pulling back 61.8%, which it hasn't yet. And then down for 3, 4, and 5 for the larger wave 1 here. Then back for 2 and down for 3. So down, moving down in more of a bearish pattern here, okay? So it's got a lot to do with this low here. Now, on the 15-minute chart, and we'd need to revisit this. So even if this was, this would be, let's look at this as being wave 1 down here, down to this point here, and we can look at, of course, we'd look at this in terms of an ABC for wave 2 pulling back the 50-60% mark, so that we could pop that in there for this count, and we would need 3 waves coming back up there. So we've only got, let's just save that. So far we've got up in wave 2 here, we've only got 5 waves up that we just looked at. So we could call that the A wave. So coming on to the 15-minute chart here, we're counting this yesterday, and we were looking at this in terms of, so just a moment ago on the 5-minute chart, we counted all the way up through here, had nice 5 waves. So we could look at this as an A wave to here, a B wave to here, and 5 waves for a C wave here. So we could probably take the length of that, move that, pop that on that low there, and then we'll get to here somewhere. So this is the trap and the tricky bit here. So it's possible that it can fail from this supply block here, as such at 1990 here that we were talking about yesterday. So it's possible for this market to have 5 waves up here and roll over from here, but the primary count is basically 1, 2, 3, ABC for 4 here, and then 5 and 1 more move up, and then down from that point. So that's how I'm sort of seeing it at the moment, in taking in consideration of other markets as well. So that kind of wraps it up a little bit. So one thing that you can do, I guess, in terms of this, it's a little bit tricky really, because in terms of personality, because this, if we get 5 waves up here, they're going to be reasonably sort of lazy in a way, but so I'm just thinking about the 3rd wave here. Yeah, you're just going to have to be a little bit careful. The setup is, the short trade setup is not there yet as such. But, I do see in stocks that we've got a very weak market. So it's going to be quite interesting to see how this actually moves up. Now, the NASDAQ has actually made a low below this low here. So I'm not concerned about that because it's got kind of a completely different count as such. But it's the S&P 500. This low would be critical here. So I'm not even going to go onto the Dow at the moment. We've spent enough time on this. So look, they're the two counts, and we just have to work through them. That's all. We may be able to get some idea as this moves up here, the speed in which this moves up, because if this was an A wave here, then a sharp B wave, which is normal, then the C wave could be on more of an angle here. I'm probably accentuating it a bit. But if it's going to be a third wave up, then it's going to be sharper than this wave A here. Okay, so if it's an A wave, wave A is normally sharp. Wave C can be simple and sharp, or it can be complex. But wave C would normally be more of an angle. So if you see it going sharply up, sharper than this one, then you know that you're on a third wave, and you'll get up to 2000 there, and then you'll have a vibration across the 2000, and then another 5 waves up, pretty much the same length as this one here. So it'll take us a little bit higher into just past the 61.8%. But yeah, all right. Well, look, that's the current thinking at the moment. Cheers.